Hello and welcome to the Small Business Briefing. I'm Brian Kelly, CEO of the Small Business Association of Michigan.
Hi, everyone. Good afternoon, and thanks for tuning in today. I'm Sarah Miller, Vice President of Operations, and I want to welcome one of our brand new members. They are Morrison Jewelers. They go back 3 generations, over 90 years. So, welcome to SFAM, Morrison Jewelers and team. All right, so Brian, let's start off with a story about President Trump. He is set to visit Michigan. Tell us a little bit more.
It's a big deal when a president of the United States visits your state, and that will happen tomorrow. It's just announced late last week that the president will be coming to Michigan, be speaking to the Detroit Economic Club, and that's 2 o'clock tomorrow, and also apparently touring a Ford plant as well. And The it'll be at Motor City Casinos where the speech will be, which is at the soundboard where the room where they do concerts and stuff there too. But that's where the Economic Club speeches happen, and it's not an open event. So if you're not a member of the club or a guest of the Economic Club, you wouldn't be able to go. But I do expect usually when the president comes, especially just given the nature of the very big changes in the way that trade works and the big stakes in these areas. I wouldn't be surprised if there was some sort of headline that came out of that speech tomorrow. But there have been no um, previewed policy announcements for it. This will be the third time actually that the president has come and spoke to the Detroit Economic Club, but the first time in this term. So pretty big deal tomorrow, and it's right on the heels or right on the on the cusp of the Detroit Economic or the Detroit Auto Show, International Auto Show that kicks off later on this week too.
All right, well, speaking of the auto show, GM recently announced that they are writing down for unused EV costs. What are the implications?
Yeah, this is actually a pretty big charge to the balance sheet, and it's about $6 billion. And this, so this money has already been spent in investments in electric vehicles. And what this means, though, is that an expense that was going to be amortized over a longer period of time, once you determine that it's not going to be utilized the way that it was anticipated, then you just essentially charge it down. You just realize or recognize that expense as opposed to amortizing it over a longer period of time. Yet another sign, we talked about this with some Ford transition costs as well. Yet another sign that's just the market moving once the government subsidies and different programs and incentives had dried up, that the market just wasn't there without those subsidies. And so the automakers making pretty big moves away from at least the scale of the electric work that was done before. So that's a pretty big amount, $6 billion. And then there's also restructuring of their business in China, which they announced another 1.1 billion in costs. So um, pretty big expenses being recognized. But again, these are sunk costs. These are expenditures that the company had already made, had anticipated amortizing over a longer period of time, and instead is recognizing them all now.
All right, let's stay with some news at the national level. The Federal Reserve meets soon, and we actually expect the December inflation numbers to be released tomorrow. So we did have a big lag in federal data. So Brian, let's start with a reminder of where inflation stands today.
Yeah, inflation being still something, definitely when you look at the confidence numbers and expectations that people have, inflation still very much on people's minds, even though it's been at the higher end of low or the lower end of moderate for quite some time now. So just as a reminder, where things stand as of December, when we got the first read on November inflation numbers, it was at 2.6%. And um, I'm sorry, 2.6% was the core inflation, and 2.7% was the overall headline inflation. And that's the consumer price index. That's it's been stubbornly stuck there for a very long time now. So that's, the target rate that the policymakers want to see is 2% or less, and 2.7 2.7 to 2.6 headline and core has been a range that it's been around for some time. Um, that disruption that that came in the federal dollars was from the federal shutdowns. The agencies that do this work, the Bureau of Labor Statistics in particular, was was essentially on pause for a while. So there is a gap in the data, and I am just a little bit worried that some of the information in the future, not necessarily on inflation, but in some of the other numbers that we normally track, will be revised in the future because of that data lag. Just the samples and the process being interrupted means it might be a little less reliable for a little while.
All right, so what do you expect tomorrow in terms of the new numbers?
Yeah, I was looking at different forecasts. So you can look at like Fact Check, Trading Economics, Morningstar, there's others as well that they're essentially investors establishing expectations on where things will land. And the expectations really do have a very narrow band um, where most of them fall, and which is more of the same. So 2.6, 2.7, 2.8% tomorrow. And that seems pretty that does seem pretty reasonable because really nothing has changed. It does just seem like things are plugging away right now at a pretty at a moderate rate and a steady rate. And so investors appear to be expecting inflation to stay about the same as what we have been seeing.
And are there any predictions on interest rates?
Interest rates, I would say that the last time the Federal Reserve met and lowered the rates by 25 basis points or a quarter of a percent, they did establish the expectation that they were going to pause for a while. So I would be absolutely shocked if they did anything up or down in this next meeting. And I think there definitely are some expectations that there will be another rate cut or two this year, and but not in the immediate future. This is definitely a point of contention that still remains between the Federal Reserve and the presidential administration, President Trump in particular, that wanting the rates to be moved down by more and faster. And so it doesn't really look like that will be accommodated anytime soon. Although I will say the stakes seem to be getting raised in the confrontation between the president and the Federal Reserve lately. But in the short term, I don't expect any changes.
All right, let's go back down to a state level now. The where Michigan has released some economic data, including the unemployment rate.
Unemployment rate actually did go down a little bit to 5%, and and so that it still keeps it above the federal level, but down a bit, which is kind of welcome relief from the upward trend that had been ongoing for a couple of years, really, and we're just kind of inching up. Although when you dig into the data, it's not necessarily going down for great reasons, not because there's a hiring spree, but still the idea of it kind of settling in or not approaching 6, and instead settling down closer at 5 at the moment. A little better than the trends looked a few months ago.
All right, what about workforce size and participation?
Yeah, this at the same time when the state releases unemployment data, it's done in tandem with the workforce data. And this is why I said even though it went down, the unemployment rate went down, it was not necessarily for good reasons. So the if you look at there's a gap in data from October, again with the federal shutdowns. The state level data was affected too. And so this is really from September to November, um, the the numbers that just came out analyzing that time period. And total employment, so total number of jobs in the state went down by about 6,000. And then But at the same time, total number of unemployed went down by 7,000. So the way that these stats work is that those kind of add together to give you the size that the workforce went down. So the workforce was down 13,000 during that same time period. So even though the number of jobs available went down by 6%, because the available workforce went down by 13, that means that the unemployment rate went down. And looking at going all the way back through, let me see here. I looked back through some other months to see how long that declining labor force trend had been continuing. And if you go back to the end of the first quarter of 2025 in March, it's actually fallen by about 58,000 since then, and or 1.1%. So the current labor force participation rate as of November, so the most recent that's announced, November, is 61.1%. So the workforce trends definitely not looking good. I don't think there's anything kind of remarkable or extraordinary that is happening, but we have an older population, and that older population is and also reduced immigration. So two of those things that are happening at the same time. So total amount of workforce just edging down.
All right, let's move into Election Watch 2026. There's been some big moves among the Democrats. So what's happening in that gubernatorial primary?
Yeah, this is such an interesting race, and it seemed like when we first started the 2026 election watch, it was early in 2025, and so it seemed like it was off into the distant future. But you're definitely going to see the campaigns move into hyperdrive now, moving forward. So you see a lot of action among both independent candidate Mike Duggan and the Republican candidates that are crisscrossing all over the state. But the news this week, the bigger news is what's happening with the Democrats. So the first is Lieutenant Governor Garland Gilchrist has announced, it was speculated, there was speculation last week about this, but it was announced and confirmed today that he is dropping out of the gubernatorial race and instead running for Michigan's Secretary of State. So running for Secretary of State instead of governor. And that's not exactly going to be an easy race either, but it's a whole different playing field. And there were a lot of folks that really did want him to move away from the governor's race, didn't seem to have the amount of funds and didn't have the organization to challenge Benson. And so there seemed to be some eagerness to kind of get the formality, if you will, what it was kind of looking like of an election out of the way. And so running for Secretary of State instead solves some of those conflicts or the problem. But the Secretary of State race among the Democrats is very crowded, and it goes to their convention. So this is not a primary of the general public. It is the political party holds a convention. If you're a delegate to the convention, you get to vote on it. They're the ones who decide who is on the ballot as a Democrat. Republicans do the same thing for Attorney General and Secretary of State. So in this case, you already have Ingham County Clerk Barb Byram uh, and also former Senator Adam Ollier that has announced, the current lottery commissioner and one of the deputy secretary of state officials under Benson that are in that race already. So it's not a cakewalk, it's not a free ticket, but out of the gubernatorial election. So that the Dem side now is just between two candidates. It's Sheriff Swanson from Genesee County and Jocelyn Benson, Secretary of State. The Now I was also going to mention that that Jocelyn Benson, Secretary of State, she had last week held a campaign event and laid out some agenda items and basically held up healthcare as either her number one or a major or top priority for her in the gubernatorial election, getting a little more specific. We will see these candidates get a little more specific as they head into the campaign season and ask voters to imagine what it would be like for them to be governor. So it is. I would expect that pretty much every week we're going to have different things to share. But this is a particularly big deal when you see one of the major party primaries narrowing in such a substantial way.
Well, and Brian, speaking of both Benson and Swanson, we have events with both of them coming up in the very near future, as well as Mike Cox, a Republican candidate for governor. So if you're watching the show every week, you know that we've been hosting all of the gubernatorial candidates in these really intimate conversations. Brian, you and Charity Dean with MBBA, you take some time to interview the candidates, but then we open it up for questions too. So I dropped the link here in Zoom and on Facebook. It's sbam.org/candidate series. And you can register to attend the events with Cox, Swanson, and Benson. Those are all coming up within the next about 3 to 4 weeks. So visit our website, join us, and be part of the process as we move toward that primary.
Yeah, it is a really big deal that each of the major party candidates for governor have come or will come and spend time with us in front of members in a fireside chat type of a conversation, and then take questions directly from the audience. It's a great opportunity to make sure that small business that candidates running for office hear directly from small businesses, that your voice is heard, and that all of them, and they all say they're pro small business, but we really want to help define what that means. It's not sentiment. We need action. And this is a really important way to be there, to meet the candidates, to make small business more real and tangible to them, and to share with them your points of view, ask questions, and see how well they do.
All right, Brian, it is time for Data Monday.
All right. Well, we are kind of back. I think we'll be back in the regular cadence now with Data Monday, since we had a bit of an interruption with the federal shutdown. So let's start out with the jobs report. So as you see, this jobs report, as I had said before, I don't want to get in the middle of the politics between the president and the Federal Reserve. But I will say that if you look at just on a 10,000 foot view of the monthly jobs report going back from 2020 through 2025, you would definitely look at this and say a weaker jobs market is a bigger threat than inflation, because inflation is the opposite. You see, inflation was higher and has come down substantially. Not as low as you'd like to see it, but this is definitely the bigger threat. And so I think it probably does warrant a further reductions in interest rates. Just looking at this now, looking at the monthly jobs report broken out by sector, it gets a little more interesting. You see, leisure and hospitality, education and health services being the big plus numbers. But look at the number of sectors that were even or down over the month, including a pretty big reduction there in retail, and then construction, business, professional services, manufacturing have been in the middle or the lower end of this here for a while. So not particularly great trends when you look at it by sector. So pretty modest. Let me go back one. This, 50,000 total, very modest numbers, but there's bigger pluses in a few categories, but also a lot of sectors that don't look particularly strong. We have here the changes in employment, and so it's different than the jobs report. We're looking at total employment here. The jobs report is looking at how many jobs were added, and but they're non-farm payrolls. Independent contractors aren't necessarily robustly included. They should be, or they somewhat are, but this U.S. employment total shows maybe a little bit stronger. Um, but here's the thing: when I said that there's Probably some revisions coming up in um, economic data because of the shutdown and some interruptions in data collection. But overall, you've heard me complain a lot about these backward-looking large revisions to previous jobs reports. But look at the Bureau of Labor Statistics response rate for their population survey. Look at the way it's just going down and down and down. So the lower the response rate, the less accurate the numbers are going to be. And so I thought I just happened to come across this and wanted to share it with you. University of Michigan does the consumer confidence, the three different metrics, and they actually all three went up modestly in this last iteration, but as you can see, still at historic lows. And so consumers not particularly confident right now. Labor force participation overall, you see just modest decreases. This is the national number. So Michigan's went down a bit. The national one went down a bit too. And the unemployment, you'll see unemployment at 4.4%. So that's actually a little down. You see this little tiny hook down there. It went from 4.6 to 4.4. Remember, Michigan's is at 5. And but again, kind of looking at the trend, another reason why I think probably that's more justified to err on the side of lowering interest rates is because just the trend, the unemployment trend, uh, just marginally moving up overall, and the new jobs really for 4 years now, marginally moving down. Not negative, bottom hasn't fallen out, but certainly nothing to be confident about. The last slide here is something that MLive shared, and I just wanted to share it with you, and that is to show what the state minimum wages look like. And on the darker side are higher minimum wages, and on the lighter side, lower minimum wages. Michigan just increased its minimum wage, and it will continue every January. It goes up, and so you see in the Midwest, if you consider New York part of the Midwest, which I don't know, part of it sort of is. Um, that and Illinois are both higher than Michigan, but other than Michigan and the kind of true Midwestern Great Lakes states that aren't kind of heavily weighted by New York City or pulled in a certain direction by New York City, it's definitely on the higher end. Just a note on these states here that don't have a color shaded in, they don't have a state passed minimum wage, which means that the U.S. minimum wage kicks in, which is 7.25%, which is low enough to where it doesn't really matter pretty much anywhere. Um, some states still have, like Georgia here, still have a lower minimum wage than the federal level, but again, it becomes incidental because the federal rate would take precedent when it's higher. So Michigan definitely moving up, one of the higher states now with minimum wages, and probably another reason why you'll generally see maybe a little softer employment here. There's always a cost when it comes to labor rules that comes with softer employment than you'd otherwise have. Um, but overall, just looking at that, it really does look like shaky, but okay. And that's, nothing to be inspired about, nothing to get overly concerned about. But if I were a policymaker, I'd err on the side of cautious at this point because it looks like a teetering type of a situation where it could get a lot worse. But it could also be a launching pad.
All right, well, Brian, thanks for your insights and thanks everybody for tuning in today. We will see you back here next Monday at 3 o'clock.
Thanks, everybody. See you next week.